Insiders have a lot of activity going on in their own portfolios. It's actually could be sending a signal to investors. What's it telling us? I got that and more. My name is Mike Bernard. I am the host of the Wise Money Show. I'm also one of the certified financial planners right here at Corhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, so there's insiders who trade, and then there's insider trading. Okay, let me distinguish between the two because there's actually been a lot of insiders that are trading, and their activity should be telling us something. What could it be telling us? So that is CEOs and presidents and board members and other folks that are running a company. Oftentimes, I want to say all the time, they own stock in the company they work for. Many of them are compensated using restricted stock shares or stock options. So those are insiders who have shares of the company, they own it, and when they buy or sell the shares that they have, that is insiders that are trading, okay? And all of that activity is monitored, closely monitored, because wouldn't you want to know if the CEO of Pfizer was selling all of his shares or buying more shares, right? That would give you an indication as to where someone that might have a better clue of what's going on in the company, that might be an indication whether they're optimistic or pessimistic about the market. So that's insiders that are trading. And then there's insider trading. And that is someone on the inside has some data. It's not public. They've got some intel, and they are making some buying and selling decisions before that data is public. A quick example could be some congressmen and women selling some of the stock in their own portfolios right before it was announced that we were going to go on lockdown, right? So that might be insider trading. Or what Martha Stewart did, getting some intel from some people and then selling on that news before it was actually public. And I'm bringing her up simply because I think it was verified in court, but you get the gist. Insider trading on non-public information, that's illegal. That's a no-no. I'm not talking about that. I'm talking about insiders trading their own activity in their portfolios. And it is telling us something. There's potentially two big things that you and all investors should glean from what insiders are doing. First, let me show this chart. Now, I didn't create this. This is someone, another financial professional that created this. And it's basically a chart of insiders' activity, okay? So they've got their own stock options, their own restricted stock, and because they're insiders, they actually have to state that, and then they have to make public all of their investment decisions. Typically, they're only allowed to trade their investments at certain times of the year, and again, they've got to notify everyone that they're gonna do this and all of that. They don't have to state why, but they do actually have to state in advance and declare, hey, I'm selling or I'm buying. And all of that, that disclosure, that transparency is to hopefully make sure, because these folks obviously have insider information. They obviously know what decisions, how things are going in the business. But to hopefully prevent them selling just on those that private information alone, they've got to disclose all this, and there's restrictions and all of that. But so because it's transparent, because it's disclosed, look at this chart of all insider activity. Are they buying or are they selling? Now, oftentimes insiders are selling because they have compensation that instead of getting it in cash, they're getting it in stock. And then when they're able to sell that stock, maybe they want to buy a new house, maybe they want to do something, they'll sell the stock and turn it into cash compensation. Okay, so they're oftentimes selling. But how much are they selling, and are any of them buying? That's what's tracked here in this data, and it typically is proven that when insiders are trading a lot, that means they look at the price of their company and they say, I'm a willing seller at this price. I'd be happy to sell at this price, meaning the price might be too high. That's a bearish overall signal. Prices are too high when insiders who theoretically should know better are looking at the stock price saying, yeah, I'll sell a bunch of shares at this price. I'll sell a bunch of shares. Versus when the price is low, sure, some insiders might still sell stock because they're trying to, maybe put their kids through college or buy a house or what, like I said, turn their illiquid investment or non-tangible investment into some real cash. But many of them choose to not sell when prices are low because they say, no, the price will be going up because obviously this is not a good price to sell at based on what I know. So all that data is tracked. Way too much selling is a bearish signal on the market that things are too high and could start turning. And take a look at this chart. Take a look at this chart. We are at a very, very bearish signal. It's easy for me to say, where lots of insiders are selling more stock at these prices than ever. Now, we're at an all-time high, and that's typically how the stock market works, is hitting all-time highs over time, right? There's lots of volatility, but the stock market over long periods of time is always setting new highs. So maybe it shouldn't really be that surprising since we're setting all-time highs that people are selling. Maybe insiders are selling because we're hitting all-time highs and yet we still have so much uncertainty. Or maybe this is a negative sign that insiders are looking saying there's no way my company should be priced this high and it won't be priced this high in the near future. So take a look at this. We obviously have had some really good news by the vaccine manufacturers, Pfizer and Moderna yesterday coming out and saying, hey, our vaccine trials have been wildly successful and we're marching forward with being able to release some vaccines very, very, very soon. And so that's good news. But look at this headline. Pfizer CEO just coincidentally sold a ton of stock the day they announced the positive news from their vaccine trials. Is that coincidental or is that foul play? Let's go back. I know Moderna stock went up yesterday with their really good trial results. But go back to the earlier part of the year when Moderna, this tiny company no one had really ever heard of, started talking about how they were making progress with their vaccine. Their stock was going through the roof, and word on the street, now I don't have this right in front of me, but word on the street was that their insiders were selling as much shares as they possibly could. They were selling so many shares. Now, were they selling it because they looked and said, gosh, we're a tiny little company and I'd love to cash out. This could solve a lot of my own personal financial problems. Or were they looking and saying, gosh, our stock will never be worth this much again. Let's sell at these prices. Or could it also possibly be saying that the vaccine effectiveness or the ability for the vaccine to really fight this disease isn't as high as many people are expecting it to be? So we'll see. I'm looking at both the global, the overall insider trading data that is shown on that first chart, as well as this peculiar or maybe ill-timed activity from these vaccine manufacturers about how much they're selling. In all, it's communicating to me the need to still be cautious, not pessimistic. Not pessimistic. I am not pessimistic on the market. I'm cautious on the market. If you look at it, we've got tons of money flying into stocks and flying into equities. I don't have that chart right here in front of me, but we're breaking records as far as how much money is flowing into the stock market and into the investing world. Right at the same time, folks that are at the helm of some of these largest companies are looking and saying, no, I'm getting out. That mixed signal should send an overall tone of caution to all investors. And here it has me once again wanting to remind you, make sure you're not going all in and all out. Don't be completely hot or completely cold. Make sure you've got an investment approach that is prudent for your overall financial plan. And I again would want to encourage you to make sure you've got momentum in that model as well. We are seeing right now a pretty big shift away from the big winners this year into some areas that have been lagging. Now, the great news is we're not seeing this shift out of stocks and into cash. That is good news. And with cases spiking and going up as quickly as they can, I'm watchful for that. But I will take the optimistic view that right now we have the areas that have really been working, tech and growth, are starting to underperform compared to small and value. And we're starting to see that rotation. Make sure that you're properly diversified, that you're taking an investment approach that's consistent with your overall financial plan, just in case this ominous sign from insiders and how much they're selling is actually a short-term bearish move. Work with your certified financial planner. Make sure you're taking your right steps in your investment portfolio. If you don't have a CFP on your team, contact one on my team. Find us online, corehorn.com or wisemoneyshow.com, or you can always send us an email, info@corehorn.com. All right, there you have it. Go out and take your next wise step in your financial life.